Hello and welcome to Startup Street. I'm Shruti Mishra and with me are Arundhati Ramanan and Ritu Singh. These are the top headlines from the startup space. Billion Brains Garage Ventures parent company of stockbroking platform grows stellar run continues. The stock has gained every day since listing, rising another 20% today. The stock is up 70% from its issue price of 100 rupees. It has hit a market capitalization of 1 lakh crore rupees. This makes the firm's founder Lalit Keshre a billionaire.
Unlimiter, an AI-powered global wellness platform, has raised $1.1 million in funding from a billion-dollar consortium of Texas-based investors. The newly raised funds will be utilized to advance AI and analytics capabilities, build strategic partnerships to enter key global markets, launch a coach training and community engagement program, and expand product innovation.
IT Minister Ashwini Vaishnav says government is likely to amend the newly introduced data protection rules to shorten the timeline for compliance. Says government is in talks with the industry to compress the current 18-month timeline for compliance.
Bitcoin recovers marginally after dipping below $95,000, wiping out all the gains it clocked so far this year. The crypto plunged to its lowest level since May amid a broader artificial intelligence-linked stock pullback. Bitcoin has lost about 25% since hitting all-time highs in October as analysts warn that the sentiment in the market has turned bearish.
Billionaire Peter Thiel has made a full exit from his position in Nvidia, according to his latest 13F filing. The surprising shift away from the AI giant accompanied him slashing his holding in Tesla Inc. As a result, his staggering departure fueled the sale of more than 537,000 shares in the company from July to September.
Well, those are the headlines that we're tracking for you today on Startup Street. Now, in what's brewing, personal care brand Bombay Shaving Company has raised 136 crore rupees in a fresh round that was led by Sixth Sense Ventures, with participation from its founder and CEO Shantanu Deshpande and others. Now, this round includes both primary and secondary infusions. The company, which recently achieved profitability and doubled its growth over FY25 to an annual revenue run rate of more than 550 crore rupees, says this fundraise is a strategic step as it prepares to go public. With this, the company aims to expand its omnichannel presence, deepen the retail reach, and invest in capabilities and brand building across high-growth segments in India's evolving beauty and grooming market. For more on the company's growth and trajectory ahead, joining me now is Deepak Gupta, the co-founder and COO of Bombay Shaving Company. Deepak, thanks very much for your time here and welcome back on the show. Start by telling us about this 136 crore fundraise you've done and how you plan to allocate this capital and the kind of investments that you believe will drive the next leap of growth for Bombay Shaving Company.
Thank you. Thanks for inviting us. I think Bombay Shaving Company and Bombay, which are our two brands, are built with a philosophy of delivering great products at an intersection of aspiration and value to young Indian consumers. And we have just in October completed 10 years of our journey. And we believe that the current fundraise is kind of testimony to our focus on continue to drive predictable growth, also bring in disruptive innovations, basis deep insights to on the Indian consumers, both men and women, and also to kind of build brands that last for centuries.
Yeah.
We believe that the current fundraise will help us to kind of drive the next phase of growth as we kind of expand profitability further and drive the distribution.
Well, Deepak, congratulations on the 10 years, firstly, and let's get into that. I mean, you claim the company has achieved profitability and a net revenue run rate of more than 550 crore rupees. Can you sustain and improve on this performance from here on? And what will the next few years look like in terms of top line and bottom line growth?
Yes, definitely. We believe that good thing about FMCG businesses, especially we are brands built on a digital native consumers. If we continue to kind of stay closer to the consumers and keep innovating for the Indian consumers, our ability to kind of deliver delight and then also drive growth as well as expand profitability should not be a problem in the near future. We are basically looking to get to 100 crore per month, which is like 1,000 to 1,200 crore annualized run rate over next 10 to 12 quarters. I think that's the journey we undertake with expanding our profitability to close to another 100 crore EBITDA for that year. So I think that's the 10 to 12 quarter projection we have taken for ourselves. Yeah.
So you're almost talking about doubling your top line in the next 10 to 12 quarters. You're also setting sights on a public listing, Deepak. How much runway does the new fundraise give you before you have to go public? And what can you tell us about the timing and the milestones for this IPO?
So like I said, I think we turned profitable a few quarters back at EBITDA and PAT level, and we also generated positive cash for the first 6 months of this financial year. So from that perspective, actually, this fundraise will accelerate our growth for the next phase. So this is for acceleration, not for survival. So I think runway is not a challenge. But how do we deploy this fund around manufacturing, product innovation, and deepening our distribution will enable the next phase of growth. And like if we deliver all these three, which is predictable growth, continue to expand our profitability, like I mentioned, and also do disruptive innovations for the Indian consumer, which we believe that there's a lot of white space to do that. We don't see IPO should happen naturally, or at least we should be IPO ready over next 8 to 10 quarters. Yeah.
Okay, 8 to 10 quarters before you have to go public. A quick word on your ambitions for the women's care category. Now, that is deeply competitive. Do you see that as a major growth engine for the company in future? And how do you plan to scale Bombay, different products, marketing, distribution strategy compared to what you're doing for the men's grooming side?
Actually, very interesting. Women categories are actually much deeper compared to men's grooming and personal care category. Like in our space, which is do-it-yourself salon at home. That's where we position Bombay for hair removal for women or even styling for women. The category is very deep. It's actually more than 20,000 crore category sitting between services and products. So we believe that that will accelerate our next phase of growth significantly from Bombay as a brand. Bombay is already 100 crore ARR brand in less than 3.5 years of launch. So we see now with the fresh capital raise, our ability to kind of invest in both brand and the innovation will significantly increase, and that will further accelerate our growth from Bombay.
All right, big plans for the women's segment, but this omni-channel expansion plans. Maybe Deepak first tell us how you're seeing consumer behavior shift in the D2C space, and how will that influence this strategy in terms of the markets you're eyeing and how much you want to grow your offline presence.
I think there are 2-3 undercurrents which we have seen. One is consumer, I think, don't want to buy from legacy brands. They want to buy from the brands they can relate to, and we do it. We have done it beautifully so far with kind of content, one-on-one marketing to the consumers, with a lot of disruptive marketing we do beyond traditional marketing. Second is I think a lot of consumers have started investing in self-care, wellness a lot. So a lot of our future innovations are kind of solving for those consumer needs. And third is we have a large D2C engine, where we are able to kind of not only kind of engage with the consumer, but also kind of build a significant lifetime value with the consumer compared to transacting on other channels. So I think that become a significant strength for us. Aided by that is quick commerce, which kind of has expedited our journey of getting deeper to consumers in tier 1, tier 2 cities. For example, now quick commerce is already into 200 cities. So that has kind of further expedited our deeper journey. Apart from that, we are present across all the major modern trade in the country, and the next phase of growth will obviously come from modern trade and general trade over the next few quarters.
Okay, all right. All right, Deepak, thanks very much for sharing that with us. We've run out of time, but it's been a pleasure having you on the show. Thanks very much.
Thank you. Lovely speaking to you.
All right, moving on. AI first customer experience company Exotel has launched Harmony, a next-gen omni-channel platform that unifies voice, messaging, video and AI into one intelligent CX operating system. Now, Exotel says Harmony could power double-digit revenue growth by FY27 and position the company among a select few global players building human-assisted AI at scale. To break down what this means for enterprises, developers and the future of customer experience, joining me now is Sachin Bhatia, the co-founder and chief growth officer at Exotel. Sachin, welcome to Startup Street. Now, Exotel, like I mentioned, has unveiled Harmony, your next-gen AI human orchestration platform. What market gap, Sachin, does Harmony really solve? And why is this the right moment for such a step change in customer engagement or a customer experience?
Shruti, thanks for inviting us and very happy and very excited to be here. So it's funny that we talk to our friends less than the amount of talking we do with the brands.
Yeah.
But the brands don't understand us at all. You call a bank in the morning and you call them in the afternoon and you appear as a complete stranger and you'll have to repeat yourself all over again. Harmony tries to solve that gap by bringing one platform which does AI, bots, and humans so that the experience is empathetic and intelligent for the end customer. Now, you said, why this moment? I think AI is finally good enough to use for automation safely. And I think CX is becoming more important than ever if you want to retain your customers.
Sure. So, Sachin, you're positioning Harmony as a unified CX operating system integrating voice, messaging, video, and AI. What makes this integration a differentiator in the crowded, CCaaS and CPaaS market? Also, Harmony promises up to 60% automation, 15 to 20% productivity gains with 99.9% uptime. Can you break down how these efficiencies actually translate on the ground for your enterprise customers?
So let's talk about differentiators first. Steve Jobs, the founder of Apple, once said that if you're serious about software, you should have your own hardware. Well, Harmony works on one brain, one workflow, and then one reliability layer. Today, Exotel powers about 50 billion conversations globally every year. So we understand network, communication, and all these channels really, really well. And then at the center of it is this intelligence, which brings context, right?
Yes.
So we understand what has happened with you, how are you feeling right now, and what is the intent with which you are talking to us, and then expose this to the agents or the bots to answer it for you. What it leads to is lower cost to service for the end enterprises, really faster resolutions for customers like you and me, and very, very reliable infrastructure, so no drop-offs.
Okay, no drop-offs there. Exotel today powers 25 plus billion interactions annually, including 4 billion AI-led conversations. Now, with Harmony, you're aiming to drive double-digit revenue growth by FY27. What are the key business levers behind that confidence, Sachin? And how do you see global expansion across Southeast Asia, the Middle East and Africa evolving from here?
Thanks, Shruti. So last 3-4 months has been extremely exciting, and we don't know where to peg that number, but I think the AI-based conversations is just skyrocketing for us. So that's, of course, the first growth lever. Also, today, Exotel serves 6 of the top banks in India. 95% of funded consumer tech companies are already Exotel users. So expanding wallet share in the CX space in those companies, rather than become an enabler, can we become the CX OS for them? And finally, we are also expanding to UAE, Saudi Arabia, and Southeast Asia. We are already present there, but now we are putting physical footprint and putting our teams there. So those are the 3 growth levers for us.
Sure. You've said, Sachin, that the future of CX is human-assisted AI. In fact, India's CX stack is expanding rapidly with CCaaS, CPaaS, and conversational AI all growing above 20% CAGR. Where is the strongest demand coming from, and how is Exotel positioned to lead this wave?
Sure. So wherever you see that the high volume conversations are there, but it requires trustworthy automation, where requirement is of empathy and not just transaction information, we are seeing really, really high growth there. A lot of automation companies are also using Exotel as infrastructure today and building their voice bots and automation around communication. So that is the second lever of growth that we are seeing. And finally, wherever you want a hybrid of human and AI, right? You don't want only bots to answer. Let's say there is a healthcare situation, you want the bot to hand off to a human being very quickly. I think those are the areas where we are seeing the highest demand.
So a big promise of Harmony is automation with empathy. So how does the platform deliver empathetic, context-aware conversations, especially for high-stakes sectors like BFSI and healthcare?
So at the heart of it is what we call as context, right? Why we like conversations with our friends is because our friends know what has happened with us. They get our feelings very quickly, and they usually know what we intend to do. So we call it context, which is state, vibe, and intent. As conversations are happening, we are building state, vibe, intent for all customers, so that we realize that, okay, this conversation can be given to a bot, or now it needs to be handed off to a human being, and the
Okay,
human being is already aware what has happened with you. So
sure.
yeah, I mean, that is automation with empathy for you.
Okay, one final question. Looking ahead, how central is Harmony to Exotel's ambition to evolve from a communications enabler to a full-fledged AI-first CX transformation partner? And also, if you could share your growth targets with us.
So Shruti, the future of CX won't be AI versus humans as the narrative,
Yeah.
popular narrative is there. I think it'll be AI with humans. And Harmony is our bold bet for that future. Our ambition is very, very simple. We want to become the most trusted AI transformation partners for large enterprises in emerging geographies. We believe we can double in terms of number of conversations, so continue to grow at 25-30% over the next few years.
Sure.
And become a trusted partner and lead this and not just an enabler.
All right. On that note, it's time for me to wrap up our conversation. Many thanks, Sachin, for joining us on Startup Street, and wish you the very best with Harmony.
Thank you so much.
On that note, it is time for us to head into a short break. But coming up next, tech startup Alive bagged 6 crore rupees from Powerhouse Ventures to expand to newer cities across India. We put the founder on the hot seat to find out more. Stay tuned. Welcome back. You're still with us on Startup Street. Alive, a Bengaluru startup, wants to power India's fast-growing experience economy. It has clocked a massive 90 times growth in under a year. The platform, which creates and curates over 125 immersive experiences across food, art, wellness and adventure, is betting big on a new India that wants to live more, not just spend more. Backed by Powerhouse Ventures, Alive is now expanding beyond Bengaluru and Hyderabad, with Goa next in line, and a target of hitting 100 crore rupees in ARR by 2027 as demand for unique, meaningful experiences surges across urban India. Alive says it's building a new lifestyle category for a generation seeking connection, curiosity and joy. Joining me now to discuss this further is Vivek Kumar, the founder of Alive. Vivek, thank you so much for joining us here on Startup Street. You know, you've built Alive into one of India's fastest growing experience platforms with 90 times growth in under a year, right? So if you could sort of take us back to the beginning, what inspired you to start this and how has that journey shaped the company today?
Yeah, thank you for having me. So I have been associated with startups for a very long time. I mean, I have been part of an incubator, an accelerator and a fund. And I have always struggled with, finding an idea on which, I can literally spend decades building. And this was 2023 January. That was the time when, I had just left the fund and I was thinking of doing something in consumer space. And the trend that I saw among, people who were around me was that, there are two kind of people, one kind of people in India who are always looking to, looking for better options. They would like to move out. Many of friends around me moved to US, Europe, other parts of the world. And then there was the second kind of people who knew that they're going to spend, a better part of their life in India. And for those people who are living in India, and there are, millions of people like them, the constant question was like, the quality of life in Indian cities is not that good. While we have, really nice, delivery services, all kind of digital services that you need, we are probably best in the world. But when it comes to quality of life in Indian cities, I mean, we struggle. And that was the problem statement that I, set out to solve. And the idea was like, hey, what can we do as, entrepreneurs to improve quality of life in Indian cities in a, very drastically way? And that's where, Alive born.
Sure.
And that's how the genesis of idea came.
Absolutely. Alive is pioneering India's experience economy, right? At a time when young urban consumers are craving more meaning and connection. So what do you think is driving the shift and how is your platform capturing this moment for everyone?
Yeah, I think, if you look at most of our lifestyle in Indian cities, what you'll find that, I mean, we all have been, multiple cafes, pubs, etc. But beyond that, all of us are now looking for something more, and this is also probably the first generation in India which is thinking like that. I mean, our parents, they had a very different kind of lifestyle. They had very different aspirations. But now if you look at, our generation, we are not just looking at, eat, work, and then probably die one day. The question is literally about, hey, if I'm alive, if I'm doing things, if I'm living my life in an Indian city, what else can I do beyond, the usual cafe, pubs and work that I do? And this India, if you really talk to people who have been in these Indian cities, who are within the age group of, let's say, 21 to 38, 39, which is where most of our customers are, these are the people who are not at all happy with the quality of life that they have. And if you talk to them about, what exactly they would want to see in Indian city, the answers are always like, hey, there should be something more to do. There should be something better to do. I mean, the consumption in India shouldn't be just about, having an efficient life. It's literally about, is this life worth living? And when we spoke to a lot of the users before starting the company, it became very clear that people are simply looking for new and unique experience that they can get in these Indian cities.
Yeah.
And the whole infrastructure for this does not exist.
Absolutely. And you're currently live in Bengaluru and Hyderabad, right? We're running out of time. So if you could quickly tell us, the kind of traction that you're seeing so far and the cities you're looking to expand into, what are the other cities across India that you're looking to now go into?
Yeah, so the traction, I mean, we launched our product in November of 2025 and within 6 hours, we were able to sell all the slots that were available for all of our experiences. So we knew that, hey, I mean, this is something that, urban India definitely needs. And that again became the, foundation for us to scale. Right now, I mean, we have scaled it to around, we are in Bangalore and Hyderabad, which is where most of our, customers come from. And Goa, we are actually launching this week. Fundamentally, what we are saying is across these cities, the aspirations of people remain same. I mean, fundamentally, we are building in a lifestyle category where the problem statement for all these consumers remains same, and that's exactly we have set out to solve. The idea is to be in top 10 Indian cities by end of 2026, and then be in 10 best touristic cities in India by 2027 December.
All right, so top 10 Indian cities is what you're eyeing. Now, Alive has also seen explosive traction, like you pointed out. If you can sort of walk us through how revenues have grown over the past year and what kind of run rate or revenue milestones you're targeting over the next 12 to 18 months?
Yeah, so we have been less than a year since our launch, and we are already doing a couple of crores in our annualized GMV. I mean, the growth, like you said in the beginning, it's been around 90x since November of 2027. The idea is to literally, I mean, we are literally creating a category in lifestyle segment, and we call it lifestyle experiences. This is literally for 100 million plus urban Indians who are looking for meaningful experiences in the city. So the goal is, I mean, our immediate goal is to reach 100 crore ARR by 2027 December. But the opportunity is much, much larger than that. I mean, just think about it: 100 million urban Indians going for thousands of experiences every weekend in the city. I mean, the TAM for something like this is definitely in billions of dollars, and that's what we are after.
All right, so you have a 100 crore rupee target over there, in ARR target over there. All right, Vivek, thank you so much for taking time out and being here with us on Startup Street.
Thank you for having me.
Well, with that, it's a wrap on this edition of Startup Street. Thanks very much for tuning in. More news and updates will continue on the other side of this break.